Hello, my Teaser King family. Oh, we have Mike to my beloved. All right. So, how is everybody today? Very good. Mark McGuire today, which we'll go through. First, let's do our football. We've got the some more history to go through, and I was listening to some videos, and like Tesla stocks down now to 190. I showed you yesterday it had dropped from 300 to 200. The guy's losing all his money. Poor baby. These are idiots when they try to do something. He can't handle the competition of the prices. Duh. What an idiot. Then we've got this girl talking about government control and everything. It's I hate people like that because it's never going to happen because we're not going to let it happen. I've just explained. See, under Austrian economics, all this control never happens because we control everything. We're the individual. We make the money. We figure out what to spend it on. Only in a communist view does the government control anything. So that's what they want, but we're not going to give them government. We're not going to give them communism. So anyway, this girl's talking about they'll use Bitcoin, and it's like, girl, when the money goes out, see, they don't understand. When the dollar goes to zero, all this is a moot point. You won't have Bitcoin because it won't be valued in anything. And Bitcoin's not money. So I don't know what the fuck this girl's talking about. These are what happens when you get idiots doing these things. And I'll show you that video in a minute. For now, let's look at the lines. We got Baltimore. I think they're still a 4. Yeah, they're still 4s, 3.5s and 4. We're going to go with 4. Which gives us plus 10 in the teaser. And 44.5. Hasn't really moved. We got the Niners 7.5 now. Let's see. They're still 7s. We'll still use 7. And 51.5. So 7, 51.5 now. Money going on it. Let's check injuries here, and then we'll check injuries there. So let's see. Our biggest concern is Pacheco. Let's see. Willie Gay, Tony. Pacheco's still questionable. Well, he didn't practice Thursday. Doesn't mean anything. Of course, he doesn't need the practice. He needs the rest. We'll find out more tomorrow. And then Deebo Samuel was limited, questionable with shoulder. So that's nothing new. The Lions with that. Let's see. Laporta questionable with the knee. Nothing major there. So let's take a look. Let's go to the next injury site on covers. I find this probably more accurate. Baltimore, their tight end Andrews is probable. He's been out, but I don't know how good he's going to be. He hasn't played in a while, and I'm sure still injured. Let's see. Detroit. Laporta is probable here. See, here he's probable. There he's questionable. The linebacker's questionable, which is good because we want the defense to be out because we bet the game over. Ragnow, the center, here he's probable. There he was questionable. It's crazy. Kansas City, now Pacheco is probable. Jesus Christ, it depends where you look at it, right? So here he's probable. And everybody, Rice is probable. All the guys we need. And then we go to San Francisco. I was tired. All the good defensive players are playing. Deebo Samuel is still questionable with the shoulder. We need him for the over. All right, let's go to the weather site. I keep getting these spam emails. Anytime you get this and they give you this invoice, that's the scam. They want you to check the invoice because you know you didn't do anything. So these people are, your subscription renewal is now verified. You didn't order for subscription renewal, so you just delete it. So, I mean, you got to wonder about all these scams, right? All right, let's go to RotoWire and get the weather. So here they still have Pacheco questionable, but we saw him probable. I'm sure he'll play. It's an ankle injury. And everybody's healthy on Baltimore. We got a 63% chance of rain. So it was 75, 11-mile-an-hour winds, which is nothing, 45 degrees. So we'll see about the rain. You know, is it a sprinkle? Is it like last week in Frisco? It was a pouring rain the whole freaking game. So what are we going to get? Deebo Samuel is still questionable. Laporta is still questionable. So on two sides, he's questionable. On one side, he's probable. We've got absolutely no rain. It's 73 degrees and 3-mile-an-hour winds. And everybody's talking about Frisco running the ball in Detroit. They need to pass the ball in Detroit. They have the worst secondary in the league. They can't stop anything. Why would Frisco run the ball? That's just incredibly stupid comments. And then as you can see, here's the Teaser Kings pick. So I told you, this is how you see my site. When you bet, when you buy it, you get the first team, the Niners over. No, you get the first team. It's a lock. It's Kansas City plus 10, and it's with the Niners over 44. It's for $3,000 or 31 units. So don't pay attention as much to the dollars as the units. I just got to throw a dollar amount in there, but it's basically 31 units. So whatever your unit is based on your bankroll. So if you have a $5,000 bankroll and you're playing, you're going to play a 31 unit game for maybe $200, especially now at the end of the year. There's only one more game. So that's how I look at it, not necessarily the 31. Hey, Dr. Football, how are you today? So anyway, so that's the pick. Kansas City in the 10, Frisco over. I'd like Deebo Samuel to play. I have a feeling he might not play. I'm okay if he doesn't play because the Lions will score, but their defense sucks. Kansas City in 10, it's just taking Mahomes. Now I'm reading all this bullshit about the colors of the Super Bowl and if it's the right color, that's a certain team. What a bunch of bullshit that is. what do they say? It's purple and against red, so it's going to be, or I think it's red or orange, so it's going to be the Niners in Baltimore. It's like, come on, it'll be the ball. It'll be the Niners because they're the Niners, and it might just be the number one seeds or what they're putting in the color scheme. I don't know, but that's a bunch of bullshit. So I'm not buying. I don't smell what they're cooking there. So basically, again, there's just the two games. So Kansas City's an 18 with a 21 defense the last 7 games. And Mahomes 30 and 14 against Lamar 25 and 7. They're also an 18, which means they're a good offense and a good defense. So they're good on both sides of the ball, so they get an A. Good boys. And so normally it's even. We tease the dog. In this case, I got KC winning 24-20, just based on Mahomes winning the game because he's Mahomes. And if I need Lamar to win the game, I'm not going to get it. I'd rather trust Mahomes to win me the game than Lamar. And I don't think it'll be any different than the Buffalo game. Allen ran all over the place, just like Lamar. But at the end of the day, it's 27-24 Kansas City. And when Buffalo needed it in the fourth quarter, they didn't score. And then they were settling for a field goal instead of Allen driving him in for a touchdown. So he choked. The whole fourth quarter he choked, and then they missed the field goal. But why are they even trying a field goal? If it's Mahomes, he's taking you in for touchdowns. And that's really the difference. Mahomes finishes the drives, knows who's open, knows the weak spot. He doesn't run. He'll hit Kelsey for 30 yards. Lamar doesn't have that access, nor does Josh Allen really. But seeing Josh Allen last week is perfect for Kansas City. Now seeing Lamar, it's the same quarterback, a running quarterback who can throw a little bit. Buffalo's probably a little more dangerous, a little better receivers. And now we got Lamar who can't hit the broadside of a barn. What are you going to do with him? So I don't see him winning, and I don't see Mahomes losing. And we're getting points. We're getting 4. We kick it to 10. So, I mean, for the people who, I can't find 2 games to bet, what are you going to do? Take Kansas City in 4? What are the odds on winning Kansas City in 10 versus winning Kansas City in 4? It's a lot better, right? I can't find a second game. Wait, here's Detroit and San Francisco. I found a second game. And in this one, Detroit's an over, 27 defense, terrible secondary. Everybody's lighting them up. They're just getting lucky they played Tampa, and the Ram game they should have lost, but the ref didn't call the pass interference play. Now they're at the road on the turf, outdoors, and they're an indoor team. They're not ready for it. The Niners are fine. They are at home. They're the A team. They scored the same as Detroit, only their defense is a touchdown better, and that's critical. So when Detroit needs time to throw, they're not going to get it. They're not going to just sit back there and have all day. It's going to be like the Baltimore game, I feel. So what happened in the Baltimore game? It was outdoors. They got crushed. They lost at Chicago 28-13. And the other games were home losses, Green Bay and Seattle. Oh, yeah, and they lost at Dallas, who now we see is not really a good team. Goff against Purdy, Goff 32-12 against weak competition. And Purdy 32-11. He had to play the Rams twice, Seattle twice, Philadelphia, Baltimore. I think they played Buffalo. They had the hard schedule, that's for sure. And they're the 1 seed, so they're at home. He came through. They needed, what was the score? It was he wins 24-21. So it was 21-17. He needed the touchdown. He got the touchdown. That's the difference between him and Josh Allen and Lamar. And here comes they're at home. I got them winning 37-24. The defense of Detroit's not going to stop them because they're balanced. They got the quarterback. They got McCaffrey. They got the receivers. Even without Deebo Samuel, they got Ayuk and Jennings and Kittle, and McCaffrey can catch. They're loaded with talent on offense. Detroit can't handle that. That's why Detroit is a 27 defense. This is their problem. They're finally playing a team beside the only other one that was this explosive was Baltimore, and they got killed. So here they're finally playing a good team. And that was the whole story of the whole league. There was 5 good teams in the league. Most of the leagues sucked. The Carolinas, the Atlanta, New Orleans, the Houston division. I mean, these teams aren't even NFL teams. They couldn't win the SEC or the Pac-12. I mean, they had no chance. They couldn't beat Georgia, Alabama, Oregon. None of these teams could, except for the Friscos and Baltimores and Kansas Cities. So Kansas City's having a bad year, but when it comes to the playoffs, now they turn it on like they know how they can. This is why they've won 2 Super Bowls, and they lost to Brady in the other one. So they know how to turn it on. They know what's expected. They know the speed of the game's much quicker, but they got Mahomes and they got Reed, and now they got a really strong defense. So they're ready for it. The Niners are ready for it. They've been to the Super Bowl, I want to say twice. Well, they lost to Kansas City. They lost to Philly last year, and the Rams beat them. Yeah, so they went once, but they got to the championship. So they know they'll turn it on. And Detroit has no idea what to expect. They are in way over their heads. This is something it's like the NBA championship with Magic and Bird. It's like the World Series. This is a different level. Detroit's never been at this level, and they're not at this level. Frisco goes there every year. They're in the championship game and Super Bowls. So look for Frisco to really turn it up and just kind of destroy them. Anyway, so I would like Deebo Samuel. He's still questionable. I'm sure he'll try to play. I don't know what the injury is. I mean, he got hit in the head. Why is your shoulder bothering you? Is it a stinger? Is it a nerve in the neck? That's really what I think it is. Does it matter? I mean, can he catch? Really, that's my question. You could even hand him the ball and let him run, but that would probably hurt him more. So even without him, you've got enough firepower, and you've got the really strong defense. So should be an over game. I got 50. I got 44. It's 24-20. And even the Niners really put the clamps on them. I think the Niners score 30, and I think Detroit's at least 17. I got 37-24. Oh, so I found 2 games to play. I got KC and 10 and the over in a Detroit team that's an over team. How much? So what I'm basing it on is the Green Bay game where it's 24-21 of 45. Green Bay's offense I find to be about the same as Detroit's. So that, they were able to get 21 on the Niners in a rainstorm. That's really the only playoff game. And then the Niners put 24 up on Green Bay, who I think has a much better defense than Detroit. So I'm looking at that game going, well, Detroit should get that 21, and look at the Niners in the 30s, gets me in the 50s, and all I need is 44. So that's how you bet a teaser. Again, Detroit being the weak link, the over team, the weak defense, and now they're on the road, on grass, playing a very good team, not Carolina or Washington or the Giants or teams like that. So look for this game. Should be a good game. The first game should be the best. KC, Baltimore should be close. KC, Mahomes gets you the win. That's what he does. And then Detroit Niners. I think the Niners pull away a little bit, but I think it should be high scoring. I don't see them like just totally shutting down Detroit as much as Goff is a choke. I guarantee Goff with 2 interceptions here. He's always been a choke. He should never have been the number one draft choice after the way he played against Utah in the Pac-10 championship. So Cal had this good team, goes to Utah. Utah kills him, throws 5 picks. That's Goff. Big game, doesn't show up. Then he goes to the Rams, big games in the playoffs, doesn't show up. He's mostly handing the ball to that real superstar running back from Georgia, and then Todd Gurley, and then Gurley gets hurt, and now he goes against New England. He scores 3 points. What the fuck? It's not like New England played 15 guys in defense. How do you lose 13-3? What is that? And it was mostly running when it had to go to all it was play action passing. And Goff couldn't handle it because they couldn't run, so he had no play action. So he just looked like a boy against men. So he comes to Detroit, no pressure, they suck, and last year they go 1-8, and then they get an easy part of their schedule, and they win the easy games, and then they play one game against Carolina that's not even a hard team and lose, and it cost them the playoffs. They had to win that game, and of course he choked. Hey, Greg and John. And now we get this year, they play nobody. They had the easiest schedule I've ever seen. It was like a Big Ten schedule, like Michigan schedule. And they play one good team, Seattle, lose. Oh, wait, one other good team, Baltimore, get killed. Then they lose to bad teams, Chicago, Green Bay, and then they and then they lose to Dallas, who we know is not a good team. So they only played one good team in Baltimore, and then let's say Dallas. But by the way, there's no good teams out there. I mean, they're playing Carolina and Atlanta and Tampa, New Orleans, and the shit. And then the AFC West, Denver was playing good. Oakland sucks. San Diego, they played a 41-38 with. See, again, that's what I'm expecting. 41-38 at San Diego, and San Diego just they jumped on them a little, but then San Diego, they couldn't stop. And I think that's what you're going to see here. They won't be able to stop the Niners. And even without, because San Diego beat them without Mike Williams. It was just Keenan Allen had, 35 catches? And that's what you'll have here. You'll have Ayuk and Kittle catching 35 balls because Detroit doesn't know how to play defense. They can't put pressure on, and they can't. And then the advantage of being at home and the crowd can yell hard on the offense so they can get some sacks because the linemen can't hear. They lose that advantage because then Frisco will be quiet, so they won't have a problem. And then when Detroit has the ball, the crowd's going to be wild, and Detroit will have the problem. And that's really how I see it. So it's going to be Frisco and Seattle, or Seattle, Frisco and Kansas City is my pick for the Super Bowl. Mahomes is just too much better than Lamar, and he's got to be pissed. If Lamar's the MVP, Mahomes got to just be shaking my head like I'm the best fucking player in this league. The only one close to me is Joe Burrow, and you got Mahomes. You got Lamar winning the MVP. Why? He's 25 touchdowns and 7 picks. Oh, he ran for a lot. Well, that's not what a quarterback does. So, again, these are Sunday. I think it starts at 3 and then 6:30. I don't know why they push it back. Saturday is going to be a tough day because we'll want to watch football. I'll turn on some old football, some nice 1970 Rose Bowl games. Those are real football games. So those are always good to watch. So there's your pick, basically. KC is a dog. If they lose, it'll be by 3, but I see them winning just like I saw them winning against Buffalo. Should be very similar, 3 or 4 point win. And then Frisco getting in the 30s, a pretty big win over Detroit, I think. I figure by at least 10. I'll be shocked if it's under 10. It could even be 20 because once they get rolling, they'll start picking Goff off. And it's going to be hard against this defense, the Niner defense, to really – they'll put up a little because they seem to be able to – the league's so weak on defense that, Green Bay got 21 on them. So it's not like Frisco's that dominant on defense like they used to be that they can't, Detroit won't drive on them. But yeah, Detroit, I mean, they're going to need 40 points to win this game because their defense sucks. So anyway, that is that. Gold price today is it's 2017, silver 22.77. Enjoy these low prices. You're not going to see them much longer. So let's go to Mark McGuire. Now, if you ever see this girl, Whitney Webb, okay, she's an idiot. Don't pay attention to her. She comes across like she knows that this is what's going to happen, but she doesn't understand economics and, BlackRock does this and that. Nobody cares. They don't control us. They can mark things. They're going to lose all their money. See, when money goes to zero, that's the end of all the BlackRocks and all the bullshit. Like they can control the money, which they can't. And that's really the key is she doesn't understand that the elitists there and they're trying to control us. Nobody's controlling me. Sorry. Oh, they're going to start asking for ID on the internet. I don't give a fuck. What am I doing? So you probably see my internet moves. You can hear me here. I mean, this isn't, what was that? So you get all that. So I don't really get. Let's see. All right, let's go to Mark McGuire.
Who still wears these headphones these days? Try this.
The fallout of a gold price revaluation.
All right, so he's talking a lot about gold revaluation. He starts talking about the de-dollarization and then silver. And Greg and John, go get Bobby. I want Bobby to hear this before we get into it. But I'll replay it. So anyway, very good news for us as far as our gold price and everything. So let's get to it. 17. Okay, I'll replay this when Bobby gets here, but for now, this is good news for us on the gold and silver prices.
Versions, and they stepped up in 2010, but they really ramped up after the dollar was weaponized against Russia in March 2022. And it makes sense that these FX conversions have been channeled into fungible and highly liquid bullion, achieving really two major things: stealthily de-dollarizing, converting incumbent US dollar debt into fully paid for debt-free bullion without raising a red flag, alongside sanction-proofing trillions of dollars of Chinese FX reserves that could, in a time of war or even in a change of an administration, which is possible, be weaponized against China. In fact, it is most likely that a very large percentage of these excess reserves now sit in the form of a massively unreported multi-trillion-dollar gold bullion hoard. And while the exact level of unreported bullion holdings is impossible to auditively lock down, the potential is that these unreported state-held shadow bank holdings could equal between plus or minus 40,000 tons, which brings us full circle to jiving with our contacts' observed estimates. There is no other plausible way that China really could, under the radar, have accrued this much bullion in exchange for dollars without drawing attention to this de-dollarizing process. Now, our well-connected Chinese contacts aside, The average of multiple credible sources have estimated China's gold reserves really constitute something around 30,000 to 40,000 tons of gold, which, to stay on the radar for now, are salted amongst these state-held banks and could be crystallized with a click of a mouse. Now, this conservatively suggests that the percentage of gold that backs the aggregate total of reported and this is Setster's reported 6 trillion assessment of China's FX reserves is plausibly closer to a staggering plus or minus 40%, alongside what could be estimated to constitute the highest global to GDP ratio of all central banks, multiples of the European gold to GDP average of around 4%. Now, if you recall, Shane, in our last episode, we looked at the ramp up and the potential scale of this de-dollarization process and why, Taiwan escalations aside, it doesn't suit China to shoot themselves in the foot by invoking the nuclear option of openly dumping treasuries. What is becoming clearer, though, is that China has, through their secretive shadow banking operations, been stealthily converting a large percentage of these hidden 3 trillion of largely dollar FX holdings into physical gold. And once this is ultimately revealed, the price of gold will far exceed Saxo Bank's $3,000 per ounce 2024 estimate, likely placing this as a floor to actually rally off, which is kind of...
So there you have it. They're saying $3,000 gold's the bottom. It'll be much higher. And a lot of this is to do with the whole de-dollarization and getting gold to oil and just getting out of U.S. money. So that's the synopsis of this thing. But definitely $3,000 gold minimum. So you can go to the gold store today and buy and spend $2,000, $2,100 on it, and here it goes to $3,000. Where else can you find a better bang than that? So keep that in mind. So $3,000.
I was alluding to last episode. Now, if it needed to be invoked, the nuclear option is for the Sino-Russia alliance to openly revalue their gold reserves, which, to avoid a related interconnected currency breakdown in the other global foreign exchange currency crosses, which gold is, would trigger every other global central bank to also revalue their central bank gold reserves, a process that, as we've talked about before, can be done with a click of a mouse. And as we previously outlined in a couple of other episodes, this can be effected by central banks simply selling existing undervalued gold revaluation account gold holdings in that account. Say, and it's pretty much like liquidity provider's figure is probably valued around $1,200 for the European central banks, and then literally into a bid-only market, immediately rebuy the same number of ounces back at market. So it could be $2,500, it could be $3,000, instantly crystallizing a gold asset gain, bolstering their GDP gold correlation, which should be supportive of their currencies and really locking in a new floor for the price of gold. Notably, at this point, every central bank without exception would benefit from a higher gold price. And clearly this process would once and for all eliminate non-Basel III compliant paper gold as a tradable asset class. It just wouldn't stand up. So where does this leave the Fed, who really, since Nixon withdrew the convertibility of gold for dollars at a fixed price, that was in 1971, in their efforts to synthetically support the dollar as benchmarked against revealing gold, remains the only central bank that has continued to bet against gold. And since Basel III compliance turned gold into a first-tier asset class 1 year ago, they have not stopped. And as we previously assessed, the only backdoor for the Fed to avoid exposing the degree of rehypothecation of multiple ownership claims on the reported 8,133 tons of treasury gold would be to also revalue gold from its current treasury price of $42 per an ounce. Whatever the price, it's going to be at whatever the price the Sino-Russian alliance revaluation price settles at. If they didn't do it, every global central bank would repatriate their gold, bankrupting and exposing the Fed's gold rehypothecation fraud.
So there you have it. As they price the gold, then that kills COMEX because they won't be able to do the bullshit paper gold derivative shit, keeping the price low. So whatever the price is determined by the market for the physical price is where the Fed will be at. But the Fed, it doesn't matter. They don't have any gold. Now the banks do. I'm sure Goldman Sachs, JP Morgan have gold. They're bullion banks. But there's no way that anybody else has. I mean, the Fed doesn't have any gold. So that's why they don't want to play this game. All the other banks have gold, and the Fed doesn't have gold because whoever's running it's an idiot. And so therefore we'll get COMEX blown up and a real physical price, which is what we want. We don't want, we're dealing with the paper price. Oh, you're charging me $2,000 paper price for physical gold. That's fine. Thank you. I'll keep taking advantage of it. But that's really where we're at. And it needs to be, what we're waiting for is the physical price. And now as they reprice all the gold, the central banks, then it'll get to a real price of, I don't know, they're saying 3. I think more like 10, but we will see. Okay.
Wow, man, that's unbelievable, Andrew. Now,
yes,
you had mentioned that you would look at how the gold price revaluation would impact the U.S. traders who are locked inside the Fed-run COMEX casino. What are you expecting here?
Yeah, that's a serious question too, and I get a lot of questions around this from U.S. traders, forbidden from accessing the global over-the-counter spot markets, who are going to be exposed to how the House deals with a massive price reset. And we'll look in detail at the likely impact a gold revaluation will have on the non-Basel III compliant CME exchanges shortly, but to provide full context, we should really continue just quickly to look at the scope of this current de-dollarization process, because it really gives us an idea of the speed of this. Nuclear options aside, China is openly easing their oil trade out of dollar into competing Brics currencies, alongside increasingly offering full-blown yuan banking accounts in Africa. And while this has been played down by the news services, and given the growing weight of evidence indicating that the PBOC have very likely accrued plus or minus 40,000 tons of physical gold reserves, plus the accessibility to Russian gold assets, alongside the potential war measures that could enable them to also collateralize 20,000 tons of citizens' gold, China will greatly profit from acting alongside Russia as a key liquidity provider to back the outlined sanction-proof Brics gold-backed commodity currency. Now, the moment that Glazniev's gold-backed currency is formalized and our contacts do continue to promise us further updates of this is one, we'll do that very soon. China is increasingly adopting this sanction-proof for oil for gold trade. And we looked at the scope of this multi-trillion-dollar oil energy trade last episode and the massively inflationary effects oil and energy and grain priced in revalued gold grams will impose on central banks who have insufficient gold to act as a counterparty. So this is a huge story. So to answer your question, Shane, let's look at the impact of the gold price revaluation on the global exchanges. Now, due to its leverage structure, the CME's COMEX future exchange will be exposed as the only remaining non-NSFR compliant gold exchange. In order to survive, paper gold positions would have to become deliverable and able to be delivered at a a net stable funding ratio compliant global price. Global price, of course it would. This would force margined, that is fractionally backed gold loans issued by the casino to clients to be called in. Far more impacting the shorts, who would be forced to cash settle highly leveraged undeliverable positions being called in by the house, who will themselves be exposed to matching globally settled revaluation prices. Or they would be drained of every last ounce, kilo, or ton by way of a massive exchange for physical withdrawal. And we've previously assessed this EFP.
So as soon as China and Russia go to this gold-backed currency for Brics, for oil and everything else, is when COMEX is done, the price will go up, and COMEX won't be able to keep doing derivatives and keep the price low, which is what they want to. So here's the idea of competition, right? In a monopoly situation, COMEX can keep the price down. Nobody gives a fuck. Oh, gold's $1,900 an ounce. Oh, geez, there's no value in gold. Da 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 da. We all know that's bullshit. But there's no competition. Now we got competition. So China and Russia are sitting there with their 100,000 tons of gold going, yeah, let's do it. And now, so they'll come out with this new gold for energy, gold for oil, new gold-back Brics, gold-back Russian, maybe gold-back $1, which is competition for the U.S. dollar, which blows it away. And it's not even in the U.S. It's in the whole world where they have to use this stupid, oh, I want to buy another currency. I have to buy dollars and then sell dollars to get the other currency, like Swiss and Brics, or Swiss and euros, and Swiss and the British pound. And nobody likes it. So they'll all go to gold to do it. And everybody wants that. So there goes the dollar. Yeah, for the next 5 minutes, it is the reserve currency of the world, but it's not going to be long. And just because of that, you're still inflating it to zero. It still has no value, even though it is the reserve currency. And that's the problem. When people around the world realize that it's worthless, it'll no longer be the reserve currency, and the system blows up, and that's why they need these gold-backed currencies. All right, let's go to
anywhere else except right here on Live from the Vault. Now, Andrew, how would all of this impact silver?
All right, Bobby, listen up.
Shane, this is where it gets really funky. The fallout of a gold price revaluation will implode the synthetically priced silver market completely. Currently, in order...
Implode means it's gone. So, hey, Pedro, that means that COMEX goes away. As soon as they do, as soon as the Brics starts with their gold-backed currency, as soon as they revalue gold, well, I'll replay that. As soon as they revalue gold, COMEX disappears. Silver goes from 90 to 1 to about 10 to 1 value-wise. But as gold goes up, so gold's 3,000, silver's $300 an ounce or more, or that's 1/10. It's probably 1,000 an ounce. But we'll let's replay that.
And for delivery, of course. Now, shorts would not find an easy exit, as each market halt would be followed by a bid-only follow-through into a bottleneck of shorts scrambling to mitigate losses. Many will be bankrupted.
Wow, that's amazing. And another reason why you can't get this information anywhere else except right here,
except for here,
on Live from the Vault. Now, Andrew, how would all of this impact silver?
Yeah, Shane, this is where it gets really funky. The fallout of a gold price revaluation will implode the synthetically priced silver market completely. Currently, in order to control one 5,000 ounce contract of silver, the CME requires a tiny $9,000 maintenance margin on deposit. And given the advantage of the House-managed illegal position concentration, which Art Chilton talked about, it's been agreed multiple times that they have an excess position concentration, which is illegal technically. This enormous level of leverage is how the house market makers, the silver pit managers, have been able to control the massively paper-diluted silver market against this scattered group of speculative commodity trading advisors. Now, first-tier liquidity providers are not stupid. Guess who's going to be on the wrong side of these bets? And currently, so a 5,000 ounces of silver is valued around $115,000. And to control it, the tiny $9,000 borrowed from the house to control each contract is historically around 8%. The implications for silver are enormous. As a result of the house running a massive leveraged, multifaceted, concentrated derivative book on these contracts, silver has become the most undervalued commodity on the planet Earth, purely synthetic. A gold price revaluation would break the ratio trade these insiders rely on to contain these purely synthetic silver contracts, likely reverting the current ludicrous 90-to-1 ratio, 90 ounces of silver to buy 1 ounce of gold, closer to more like 15-to-1 or lower. Disbanding this ratio trade in itself would raise the price of each silver contract currently contained to the low 20s to about plus or minus $200 an ounce. This would likely force the 8% margin to increase to, at best estimate, 50% or to as high as 100%. Once again, longs would have an edge over the shorts here. So if we took 3,000, if we took 3,000 gold as the revaluation point, the completely synthetic derivative determined ratio trade would be blown out of the water. The short gold or silver ratio legs would be caught up in the underlying volatility, and both sides would scramble to square positions as the entire precious metal derivative complex collapsed into absolutely unfactored, unknown territory. One way or another, once silver rises above the technical and cartel defended fracture point of $35, derivative determined ranges would implode, triggering a bid-only short covering ramp well in excess of the 2011 $50 highs. So, who would be caught out into this revaluation? Every single CTA, commodity trading advisor, was naked short sold gold. Naked in so much as while their COMEX shorts are backed by dollar longs, so these debt-laden fiat longs don't represent a deliverable NSFR compliant gold price when called upon for delivery. So in other words, when unleveraged gold bullion is demanded for delivery, it is just going to take many more depreciating dollars to buy the same fully paid for COMEX ounces, kilos, tons on the other side of these paper bets. When delivery of these paper back shorts is then called in, this is when we will see the chaos unfold.
Wow, that's amazing. Now, Andrew, in the last couple of weeks, the theme of a lot of the questions that came in kind of held around, like, what are you expecting, like, more immediately? What's happening right now in the markets? Can you address that?
Yeah, and I will say, look at the action today. I mean, it's typical pit open to pit close selling. So again, if you're a stacker, this counterintuitive, officially driven, heavy 2024 action has provided you a wonderful bargain basement price. And if you are mirroring what the central banks and the sovereigns and insiders are doing, which is converting depreciating dollars, pounds or euros into bullion, then you're doing exactly what the smart guys are doing. And if you want to drill down, let's face it, we all love a bargain. But let's now look at the current counterintuitive action and what we should expect into the end of the month, as these fractionally backed casino contracts have to be fully funded into readiness for delivery into the end of the month, as well as the progression of gold into the first quarter. Now, we're recording this episode on Wednesday, the 24th. And since our last episode, where we noted that the easily led CTAs, who are the counterparties to the House insiders betting long against them, we talked about them being led into a bear trap. Well, as is always the case, these momentum-chasing useful fools are massively wrong at both ends of a momentum-chasing cycle. And what we see now is when these shorts turn around to exit this bear trap, they'll find the back door is slammed shut. And the action that we have witnessed since our last episode, recorded on the 10th of January, when gold was at 2026, 80, it fixed at that price then, and we've seen intraday volatile CTA rinsing aside. I mean, basically, it's gone sideways since into our episode here on the 24th. So the action is just a culmination of the officially driven PSYOPs operation we've really experienced from the open of 2024 trading. Both gold and silver futures have been driven into fundamentally as well as technically oversold bargain basement conditions. Now, the reason gold has gone sideways, despite the concerted, officially attempted PSYOPs operation to sell gold against the dollar, has been limited to influencing the non-sticky CTAs, who every single pit open have sold gold and silver into every single pit close. But the selling has been insufficient to offset very large central bank and safe haven physical demand, which is why a very large central bank spot orders at spot 2000 have really had insufficient CTA open interest to come in to actually let them dare to run through what are very, very large central bank orders sitting at that level. Conversely, they've been capping 2050 because that is where central bank buy stops are. So you've kind of got this range where they've really, in other words, hence this synthetic range. So gold's paper-driven, highly counterintuitive heavy action is calling gold for a powerful rebound value, which is really structurally similar to what was triggered in we had a $59 short squeeze from it was 1987.50 to 2046.90 on the 13th of December. So really, it's been really this is where it's been contained back into that range for options purposes. Now, the silver action illustrates just how broken the silver market is, and just as we've identified, the 100% synthetic ratio trade, where in this la-la land derivative world, we're supposed to accept that it's 90 ounces of silver to buy an ounce of gold, when the real ratio is 8 to 1. So into this ludicrous silver action where soft retail silver demand has fooled the CTAs into selling rallies and just chasing a dot on a screen, they're completely blinkered to the wholesale 1,000-ounce bars getting very tight. Now, we've evidenced massive Indian buying, which by Monday, a couple of days ago here, evidenced Indian buyers calling around the desks to access as many LBMA bars as they can above spot. Very unusual, because they are usually able to access silver below spot, and this wholesale market spillover began to get reflected in Monday's massive 503.9 tons of SLV inflows. It says it all. Now, look, the message I'm sending is one really of wealth preservation. And the message is de-dollarization and a gold price revaluation is on the front burner. And the reason I have been really put this on the front burner is that unfactored geopolitical escalations raises the odds of it coming when everyone least expects it. So really, the only question is left: how much physical gold?
So you can see this revaluation of gold. I don't know what that means. It does blow up the silver COMEX, which is good. It does blow up the it does blow up the value of gold much higher because it gets revalued. So now we're not on paper. So basically, it blows up COMEX, which is what we have been waiting for to get an actual physical gold and silver price. However, you better buy it now because it's going to go way up. You're not going to be able to afford $4,000 or $5,000 gold and what $1,000 silver. So get it now while they're still holding the elevator for you. And some of the comments in his thing is like, yeah, we've heard this before. Well, the difference is basically Brics. This whole gold, China, Russia, Saudi Arabia, gold for oil, gold for utilities, gold standard to get us off the dollar being the whatchamacallit money, the global money. That'll be gone because there's no other way to go. There's no other money that can be the reserve currency but the dollar, because that's the way it's been. But once that blows up, then it'll go to this gold thing. That's what'll make the price go up. And he said it's on the front burner. Now, do we believe him? Yeah, I think it's on the front burner. But what does that mean? Do we have 2 weeks or do we have 2 months? That's why I say let's look at the second quarter and see what happens. But I'd want to buy all this gold and silver I can, which is what I've done. I'd rather be in it and waiting than not in it and then missing the boat. You can't, once the Titanic sinks, you can't get off the boat then, right? So if we look at it as like the Titanic, it's hit the iceberg, the water's coming in and they're going, well, should I get in the lifeboat now or should I wait 2 hours? Well, if you wait 2 hours, the boat's, you're at the bottom of the Atlantic. What good did this? So get into the lifeboat now. And that's what I kind of am saying. Get into the gold and silver now. It's cheap. Stop asking why is it low or anything. We know the answers. Brics will get us to a real gold price. These guys don't like America. They want to get the US dollar out of it because of these Russian sanctions and everything. So we get to the lifeboat now. So buy as much gold and silver now at these cheap prices as you can. Hello, Nick. Did you see our boy Boutte? Yeah, I saw that. Well, what's strange about it was a couple of years ago. You know, I don't know why it came out now, but the funny part is he bet on LSU. So I don't really get, that's what Paul Hornung did. That's what Pete Rose did. They bet on their teams. They knew they were going to win, so they bet on their teams. I don't see what's wrong with it. I don't see how anybody could find out. I mean, I would call my buddy in Vegas, say, hey, put down these bets or whatever, and off you go. Use fake name to place over 8,000 bets. Well, he shouldn't have been making the bets. It should have been like his sister or something should have made the bets. But again, I don't get it. You want to be in bed with FanDuel and BetMGM, the leagues sponsored by FanDuel. So they're telling you to bet. And then when they bet, they're saying, oh, wait, you're suspended for betting. Well, wait, why do you have FanDuel and BetMGM as your spokesperson, as your sponsors? What the fuck? I mean, that's insane. So anyway, yeah, Pedro, it's not hard to believe if you've been listening to us. That's why I go to Mark McGuire a lot, is really to get, I understand all the concepts. That's why when I hear somebody talk about it, that's why I pick them right off. Like this other girl, Webb, who doesn't understand economics. In other news, Tesla down $200 billion, trying to sell an electric car that nobody fucking wants. Stock market plunges 12%. He loses $80 billion. I'm going to get into the video, just the fact the stock went down. But what else is new? Of course, nobody wants electric vehicles. You're trying to sell a product nobody wants. Then there's all this problems in Chicago. It's so cold, they won't charge. They do charge. They only charge for a little bit. not the 300 miles that they're supposed to get, but they get about 65, 70 miles. And then you're charging again, and the charge that would take 45 minutes in the summer is taking 3 hours now. God knows the cost is going to go up. So you have a lot of, like I said, why do you want the headache? I go fill up my car with gas. It starts. I drive it. I know I'm going to get 3.5, 400 miles to the gallon or to the tank. It says full, and it goes down a little bit. There's no bullshit. As long as I change my brakes and tires and oil change, I'm fine. I don't have to worry about it. I can drive where there's no, like when I drove down to Alabama, when you go through Ohio, you're okay. You go into Kentucky for 2 hours, there's no gas stations. You go through the downtown, then you're in nowhere. There's no, you hit one gas, then finally, so you're probably going an hour and a half, 2 hours with no gas stations. How'd you like to be in a Tesla then? And then they're catching on fire. They're blowing up. The coils get too hot. The lithium's not stable. I guess there's even lithium buses or trucks or something. So people are in the bus and it's blowing up. I don't want anything to do with electric. I never worry in a regular bus or a regular car or an Uber that the guy's going to blow up. But I will now. I will not be in any. Then I hear, is it Hertz or Avis is selling like 600 electric vehicles that they have. They're just giving them away because nobody wants to rent them. And then they're giving them away at half off. And then they're buying gas-powered cars. So this whole little control experiment, number one, gone. Electric cars ain't going to work. Digital dollars ain't going to work. Again, it goes back to Say's law. We work and make money, and we take the money to buy products. And we are the ones determining what it is you're going to sell us. You can only sell us what we want. If I want a Michigan shirt, that's what you're going to sell me. You don't have any, I won't buy it. But that doesn't mean I'm going to buy another. Well, we're only going to sell Notre Dame shirts. Well, fuck, I don't want a Notre Dame shirt. You're not going to sell it to me. I noticed that in Vegas. I got some nice Bellagio sweatshirts, a nice Caesar sweatshirt. I go there now, I can't even find them. I go, who the fuck's making who's selling your goods? I mean, what the fuck? That was the best part of going. You get a nice Caesar's Palace T-shirt and a nice Bellagio T-shirt or sweatshirt. Now it's like, what the fuck? So anyway, so you got the free picks. It's actually a lock. It's take KC plus the 10. Take the Lions. Frisco, go over 44. Now it's 45 if you waited. It's just like gold. If you wait, the longer you wait, the worse you get it. I got 24-20 KC. I got 37-24 Frisco. Samuel and Laporta are still questionable, but Pachenko is still questionable for KC. I would think it's only Friday, all these players will play. Samuel, I'm not sure because it's a shoulder. Probably can't get banged. He'll probably play a few plays, but that's it. I don't know if he can catch. Can he raise his hand and catch the ball is really the question. He can just slide down. He doesn't have to take the hit. But Checo is critical, but we have Chocolate declared just in case. And then Detroit, they would miss Laporta, but he's questionable. He played last week, so I'm sure he'll play. The center's questionable, I think. And then I think that was it. So it's basically Laporta who play. I'm sure he'll play, and then the Niners. It's Deebo Samuel, but even without him, they got other players. Ray McLeod, I love that. I think he went to Rutgers or Michigan State or something. Yeah. Anyway, the Niners will show Detroit what it's about, and I think KC. Mahomes says, "Excuse me, but I think I'm the best player in the league, not you." And we'll see Lamar. They'll blitz Lamar pretty good, and he'll like deer in the headlights. Oh shit, what do I do with it? I just wanted to touch base on the football. So that's Mark McGuire, and let's go back to the Roman Empire. No, we're not going to go all the way back. We're going to go to the third test. June 22nd, 1993. Now we're in the master's class. The Continental Congress, 1763, French and Indian Wars. England wanted to tax the U.S. for the war. The U.S. didn't want to pay. A revolt issues. Oh, look, we're having a war about taxes. It's always about money. The Continental Congress comes in, one member from each colony, 13 colonies. Fight the revolution, support Washington. That'd be George Washington. Support Washington could print money. Continental money financed the war. They borrowed, they printed money, Continental dollars, racked up a large debt. Oh, you have a war, you got large debt. Because the bullets and the guns and whatever else, they didn't have tanks and everything. That's all going to be, that costs money. It doesn't, it's, you're not selling, you're not getting revenue in. It's strictly a cost. That's the problem with the war. Greg and John, TK, you going to play basketball or hockey after football? I don't know. I don't normally. I get into the NBA playoffs because it's much easier to do. Like I get into the baseball playoffs. Every day is a bit hard. Football is once a week. Because the problem with basketball is the back-to-back games, 3 out of 4, 3 games in 4 nights. So it adds different variables than football. Yeah, there's that Thursday game. So it's Sunday, Thursday, and then they don't play till Sunday. But I really don't pay too much attention to that. But in basketball, let's say they play tonight and then they play tomorrow. So they travel. So let's say Detroit plays Chicago tonight, travels to Boston to play Boston. So it's not a normal game I can trend. Now it goes into a different category, back-to-back games, and how are they in that? So I don't know. I haven't done that too much. Like I said, a little bit more easier in the playoffs. Bet the loser back. Been successful where a team will lose game 1 in the playoffs and they're at home, and then I lock them in game 2 because they have to win, otherwise they go down 2-0 and then go to the visitors and they're going to be swept, but they're the better team. That's why they got the home field. So then I'll lock game 2 if I get it. I did that with Golden State a few years ago, but it's much easier and more accurate to do the playoffs than the end of January. Start figuring out trends. I could do it, but I just really it's more of a time issue and a desire to go all those games or college. Somebody asked me yesterday if I do college basketball, which has got to be college football. Is a mess with 60 games, but at least it's once a week. I can Oklahoma's playing Saturday, and I could just go through that. College basketball, they're playing 2 times a week. That's really a nightmare. I'd have to focus on like the Big Ten or the Pac-10 or the ACC and just focus on those conferences. But I haven't done it yet. All right, back here. Legal tender laws make continental dollars legal. Almost causes hyperinflation because they printed to pay for the war, and it's large debt. And you can see what large debt does. And guess what we have here? Large debt. Washington's army confiscated property. We were a Confederate country. Articles of Confederation. They assumed all the debt from the war by the Continental Congress. No taxation. Could borrow. This failed. So it's really hard to pay for a war. Philadelphia Constitutional Convention, which made up the Constitution. Alexander Hamilton. Thomas Jefferson was in France. He was the ambassador. Alexander Hamilton was a Keynesian. Thomas Jefferson was the Austrian. So they had a play, Hamilton, and I would never have wanted to watch it because he basically was a Keynesian. Huge debt in the U.S. Alexander Hamilton, 1755, West Indies, was born. He was an English citizen, poor, became wealthy, died in debt. He got the U.S. out of debt, influenced the presidents, rivaled the kings of Europe, served in war, became a tax collector, elected to Continental Congress, defended the loyalists or the crown, a strong nationalist or a strong socialist, delegate from New York to be on Continental Congress. The three divisions of government: legislative, judicial, and executive. I don't want to get too much into that. I want to keep in finance. Two branches: House of Representatives and Senators. The national wanted the president for life. Central government should appoint a state governor. He liked the English system, copying that. He wanted the U.S. to copy the English system. Bad idea. New York was a key state. Federalist Papers, Hamilton, Madison, and Jay, and they're all socialist. More federalist government, unity and sovereignty. Anti-federalist first Secretary of the Treasury, 1789. He had to pay off the debt of the war. 1793, French and England War. Jefferson is the Secretary of State. Hamilton, the leader of the Federalist Party. Madison, the Speaker of the House. The third president of the U.S., Thomas Jefferson, and he made the nickel. Democratic Republican, wrote Declaration of Independence. Northwest Ordinance for the new Northwest Territory, which is Seattle and Oakland and San Francisco and northern Montana and those countries. Vision: nation of small farmers, independent people. Every 20 years, a revolution would be a good thing. Government is a necessary evil. Supported public education, supported Locke's theory of natural life, liberty, and pursuit of happiness. Government by the people, protect natural rights, have the right to money. Money is property. Government should not be in banking. No checks on the federal government. Exactly. What do we have? A fucking Fed, federal central bank. What did I just read? Government should not be in banking. There's no checks. So they're printing money. These idiot feds at the Federal Reserve Bank are printing money, and nobody checks. There's no check on them to stop them from inflating the money to zero. This is the problem that we have with Keynesian and communist socialist view on the way things should be happening in the U.S. right now. This is what blows up every country. They have the government printing the fucking money or taking over the central bank, and there's no checks on them. They're a monopoly. You should never have a monopoly in charge of your fucking money or in charge of the laws. It's always got to be checks and balance. That's the whole idea of the government. The president's checked by the Congress and the Senate, and they're all checked. Everybody's checked. That way nobody can fuck everybody over. But no, we decided to have a central bank and fuck the entire country. Hamilton pushed for higher tariffs. He's a federalist and or AKA socialist, communist, to get out of war debts. A lot of power in the federal government. Jefferson didn't like the power democratic republics. Jefferson is we like. He's our friend. He's conservative. He's Austrian. Set up first bank of the U.S. It's a national bank. This is how the country is founded, and they see the problems. And then what do? We go back to the Federalist Hamilton socialist ways. When we know they're bad and they don't work, but we do it anyway. Jesus Christ. The Bank of the U.S., National Bank, private funds. Government has a larger share. So Hamilton liked the control and Jefferson didn't. I'm not going to get too much into it. We know Hamilton's the bad guy. Jefferson's the good guy. Let's put it that way. Hamilton, if it do sense, say no, then do it. Bought us out of inflection of the war by the central bank. tariffs primary tax for the U.S., which is other goods coming in. So if England was shipping goods to us, we would tax it. Jefferson, law only, do what's in Constitution. He didn't renew the Bank of the U.S. He saw it was bad. Oh, by the way, we have the central fucking bank now. We need Jefferson now. We need Jeffersonians. 1787, a new constitution. U.S. is a single nation, 4 economic provisions. Outlawed tariffs between states. So it's free trade from New York to California. U.S. was the world's largest free trade market. This is why we're successful. Metallic standard. No state can make anything but gold or silver the legal tender. What the fuck happened to this? This is 1787. No state can make anything but gold and silver. Where did it go? That's the only legal tender there is. There's no money. There's no fiat. Where did it go? Why in 1787 we put it in the Constitution, and now where did it go? Tax limitation, taxes levied by a state's population, and takings clause, private property cannot be taken for public use without just compensation. This made the U.S. the economic leader of the world. Now we're the Alabama of the world. You can't. So in other words, you have a house. They cannot take your house unless they compensate you for it. So if the house is worth $500,000, they take it for oil or put it in a highway, whatever. They have to pay you for it, right? They have to compensate you. George Washington, first president. John Adams, VP. Jefferson, Secretary of State. Hamilton, Secretary of the Treasury. First under the Constitution. So, Republican, good, Jefferson. Natural rights, agrarian, and I'm not sure what that means. Favored farmers and small businesses. Adam Smith, laissez-faire, free trade, small government better, strict constitutionalist, must be in the Constitution or the government can't do it. Imagine if we did that now. Intellectually, wrote Constitution, states' rights, worried about inflation and concentration of power. What do we have now? Inflation, debt, concentration of power. Bad as Hamilton. He's a Democrat. So back then, 1787, large government. So this is what Hamilton believed. This is why it was bad. Large government's better. Wanted to be like England, communist, socialist. Wanted tariffs. We don't want tax. We want free trade. Wanted government projects. That's what Keynes does. That's not good. A nationalist and a monarchist. He wants a king. We don't want a king. We want to elect presidents, so there's not too much power. And he's a nationalist, which means he's a socialist, which actually means he's a communist. So this is why when I watch Hamilton, I'm like, I don't want to watch this guy. This guy's a fucking asshole. It's like watching something on Keynes and thinking he's good. No, turn it off immediately. Jefferson wanted free banking, and that would be zero inflation. How about that? Everything must be backed by gold. Competition between banks would prevent inflation. Again, competition is the winner, and back it by gold. And if you back it by gold, you can't inflate it. Amazing. Hamilton wanted a central bank. We all know the problem with that. No competition. What's this guy, out of his fucking mind? A lot of power and inflation. So even back then they had Keynesianism and socialism and communism, even way back in this is actually 1830 to 1861. So he very much thinks the way of England was basically a socialist. They had a king. I thought they had gold back then, but I guess, I don't know. I'll have to read that one. But basically, central banks are bad because there is no competition and a lot of power, and they cause inflation. So this is all the bad stuff, and yet we have it. We know it's bad. We knew it was bad in 1787. We knew it's bad in 1830. We know it's bad in 2023. Paid off debt through the sale of the Western land, California, Arizona, Colorado, Texas. Andrew Jackson administration sets the tone for today. Strict constructionism, zero inflation, separation between government and money, the Suffolk Bank, private central bank, deposits from other banks, no discount can back with gold, 10% discount on checks. They won't accept their checks. I don't know if I read it right, but it was a private central bank, not a government central bank. Anyway, there you have it. Strict constructionist, zero inflation, separation between. See, this is the key: is the separation between government and money. Who runs the Fed today? The government is running the Fed. It shouldn't be the government, but you shouldn't have a central bank anyway. You can't let the government run anything because it's a monopoly. Civil War, 1861 to 1865, turning point in the U.S. States' rights, abolish slavery, and they wanted tariff for free trade. The real thing of the Civil War was the South had cotton, which was used in clothes, and England wanted the cotton. So we wanted to trade the cotton to England for so they can make clothes. So we had cotton. That's what we had, all the cotton fields in the South. And the North wanted to tax it, and the South didn't want to tax it. They wanted free trade. That was the real reason of the war. Slavery got into it, states' rights got into it, but it was really the cotton that was what it was. The South were Jeffersonians, and the North and the tariffs were Hamiltonians. So you can see it with New York and Washington being very socialist today. South wanted free trade, low price for manufactured goods. Well, there you go. North wanted tariffs against the British. So we go to war over it. You could think of better things to go to war over, or better solutions than this. British bought cotton to make clothes. Okay, so I had already known that. North didn't want the British competition. South sold cotton to the British. Abe Lincoln, minority president, Southern states succeeded to leave the Union because they didn't want Lincoln. Economic growth slowed down with Lincoln, so he was a bad boy. 4 ways to finance the government, a war. So you can do, there's 4 ways. They're either going to be inflationary or they're going to be debt and interest. I mean, you got to pay for the war. So you got to feed your shoulders, buy guns, buy bullets, cannons, back then, horses. You got to feed everybody. So it costs money. So you can tax, there's no inflation and no debt or interest. You can do bonds, which is no inflation and it is debt. You can do fiat currency, as we know, which is heavily inflated and no debt. Or you can do bank credit, which is both inflationary and debt. Lincoln went to fiat money, the greenbacks, to pay for the war. Immediately inflation. Lincoln. I don't know what he's doing on the four horsemen. Should have Flair and Arn Anderson and the other 2 guys. How did the North finance the war? Greenbacks, fiat money. Lincoln issued greenbacks. 2 types of money floating around. The greenbacks traded at a discount, inflated, and gold. It seems like gold's always the answer. They issued bonds to pay for the gold. National bank account, monopoly on the issuance of currencies. Reserves could be bonds, greenback, and gold. They outlawed gold. They outlawed the state bank notes. Who outlawed? This is a National Bank Act. How do you outlaw gold? They had to create a monopoly. That's why they got rid of the other money, gold and the banknotes. The National Bank Act. This is World War. This is Revolutionary War, 1860s. This led to fiduciary inflation in the trade cycle, which is what we don't want. County banks, city banks, central banks, and gold. Okay. Start of large government projects, Transcontinental Railroad, Union Pacific went east to west, Central Pacific went west and east. Why didn't they just use the Union Pacific and come back? Government highly subsidized the railroads. The first scandal, credit mobilizer. They laid the track and received land, contract company owned by the Congress. See how much fun I had in my program? Period after the war led to corruption. Oh, I'm shocked. Two types: entrepreneurial business market forces, which we want, and political entrepreneurs get favors from government. And that's where it all goes downhill. That was JP Morgan. That keeps the competition out, which fucks the Adam Smith rule. Austrian economics. We want competition. It's better for us. We want the red sock and the blue sock. We don't want to only get red socks. The Democrats were pro-gold and low tariffs. The Republicans were anti-gold and high tariffs. Funny how the party switched. 1879, U.S. back on gold standard. Yay. Low taxes, little government, country exploded with economic growth. There's something to this. Gold standard, little government, low taxes. Always seems to come in, always all of a sudden economic growth. And the problem is the dragon comes, right? So as you're becoming this huge economic growth, the corrupt motherfuckers come into the city. 1879, 1914, U.S. was a debtor nation because of expansion. Pedro, I got inside info. Baltimore Ravens will beat the Chiefs by a big margin. Yeah, okay. Yes, TK. Pedro, say what were you getting? Yeah, see, I don't. What does that mean, Pedro? You got inside. What do you? From whom? God? I mean, what? That's bullshit. JP Morgan, are the devil. He wanted monopolies, presidents of New York. So he bought the presidents of New York. He was an investment banker, imported capital from Europe, railroad, steel, England, prime political entrepreneur, expert in building cartels, guaranteed profits, limited competition. He got government to regulate and limit competition, price fixing. He wanted a central bank. This is where the problem is this JP Morgan guy. And that's what we have with our gold fixing right now is JP Morgan. It's his son or what his nephew or grandson. It's the same bullshit. I don't want competition, so I want everything. Rockefeller, a business entrepreneur, cost cutter, fought Morgan with antitrust laws. Rothschilds controlled the Russian oil wells, presidents of Ohio. So Rockefeller had the Ohio presidents, while JP Morgan had the New York presidents. He got them elected, and then they did what he wanted. So what's your inside info, Pedro? See, now you're talking to the wrong guy because I'm stoic. So you either got to say, so give me the final score that you know it, and then we'll see if you hit the final score. What are you trying to do here? Is this adding? Are you adding value to the class with this bullshit? I don't want people coming in and reading this and betting on Baltimore when I'm giving out KC. So what? Don't say stuff like that unless who are you getting it from? I don't care that you get it, but if you're going to say that, you've got to be very clear. Because first of all, you're going against me. This is my class, so you don't go against me without reasons. So what are you doing saying this? So I don't. people, please ignore Pedro, and this is why people get outed on my channel if they come up with this BS. And they like, do you know? Okay, so tell us how you know. And if you don't know, then don't say the comment and retract the comment, please. Morgan had Roosevelt, Teddy Roosevelt, 1901 to 1908, built the Panama Canal. Rockefeller got Taft elected, 1909, 1913. Morgan then gets Wilson, 1913, and he puts in the income tax in the Fed. Senators were elected by popular vote. So you think Wilson's the bad guy, it's really Morgan's the bad guy. Morgan controls the Fed, and that has never changed. And this is the problem we have. It's JP Morgan. Not you, Greg and John. He's got to you don't have to retract it, Greg and John. Pedro's got to retract it. So I don't want to hear that shit, Pedro, unless you tell me where you're getting the info from and how reliable it is, and is this the first time you've gotten this, or what the hell's going on? Because I don't want, if you don't retract it now, I'm going to take you off, because I don't want people reading that as if you are a handicapper and you have this info and they go bet on Baltimore and they lose and they blame me, because this is on my class. So I'll give you a minute to retract it. Otherwise, I'll retract it. 3 keys to Morgan's antitrust laws, political entrepreneur, and cartels. The businesses want protection. So Morgan wants to protect the business to make them more profitable. 1879 to 1914, the gold standard, no government intervention. That's why they don't like the gold standard now, is the gold standard, you don't have government intervention. They can't do anything. That was that other thing that Whitney Webb said. She goes, well, they want to control everything and the internet and put you on Bitcoin for the digital dollar, because they want to be able to see everything. So they're afraid in Bitcoin they can't, or if you use money they can't. So they want to see what you're doing. And she forgot to mention gold, where they can't see shit. After the Civil War, the federal government becomes more powerful. Government has outs. Set up intervention, ends classical liberalism. That's after the Civil War. 1913 to 1914, a big change in the U.S. U.S. government starts intervening. Starts the end of classical liberalism is 1914, and they start the interventionism. World War I, nobody won World War I. Every problem gets traced back to World War I in the 20th century. Trigger of the war, killed the Archbishop of Austria. Serbians want to control over the Austrian states. The Black Hand, or the Mafia, the alliance with Russia. Prince-up is the Black Hand. I prefer Mafia. They call it Black Hand. Dmitrievich, evil Black Hand leader, kills the king of Serbia. Serbia wanted the piece of land owned by the Austrians in Yugoslavia. Russians got French to fight the Germans, the Serbs to fight the Austrians. Russians wanted Constantinople, which is Turkey. Princip, 18 years old, kills Ferdinand, the Australian Archduke, started the war, gets Serbia into the war against Austria. Russia backs Serbia. Russia, Dmitrievich, Black Hand, yep. Austria declares war on Serbia. Germany backs Austria. Russia allies with France. Britain needs to back the French Navy. So World War I, a very strange war. They wanted a warm weather seaport, and they didn't. That was the point of the war. So, Pedro, you're not retracting that. You need to retract it, please, or I will. So it's 408. I'll give you the 415, and then it's I'll do it. And if I do it, I won't hear from you again. Serbia adjudicated by Russia advanced, wanted Istanbul for warm weather seaports. They wanted to be in Turkey. France invested in Russia with railroads. France and Russia couldn't defeat Germany by themselves, but could win a two-sided war. France afraid of the German Navy. France agrees with England to use their navy. Austria-Hungary allied with Germany and Italy. Serbia, Princip goes into Austria and shoots the Austrian arch. Well, we got that. So it's Serbia, Russia, France, England, and Belgium against Austria-Hungary, Germany, and Italy. So it sounds like a big game. Battle of Tannenberg, end of the Tsar. Germany defeats Russia, but lose the war. 1914 ends. Free trade, gold standard, classical liberalism, start of era of that. So it was a very costly war. J.P. Morgan, responsible for the U.S. into the war. 1914 recession crash versus chief supplier to both sides. So J.P. Morgan supplies arms to both sides, agricultural booms, copper minerals, manufactures war material. Morgan propaganda. He owned 25 newspapers. Morgan sounds like a Nazi. Morgan buys all war materials for France and England. Gold influx from England and France. Securities are also used to buy war materials. Morgan liquidates British sells stocks, private loans through Morgan. So Morgan's a little son of a bitch doing all this. That's why he controls gold now. Anti-German from Morgan's newspapers in the U.S. 1915, Lickeny incident, British boat full of ammunition. Woodrow Wilson works for Morgan, not Morgan working for Woodrow Wilson. Colonel House, Morgan's friend. Pope Vatican has peace plan. Britain rejects the offer. 1917, Wilson put us into World War I. U.S. and England side, U.S. tricked into the war off the gold standard. Trouble. 1917, Russia, Lenin leads the Communist Revolution. 1916, Russian Revolution, Kerensky regime. Communism wins the revolution, 1917 to 1989. 1918, Germany gets peace treaty of Versailles. British blockade wins the war. And that brings Hitler into the game because he don't like that Treaty of Versailles. Hitler did fight in World War I, but he was just a corporal. Fed inflates by lowering the reserve requirements. And the boom, U.S. produces for rest of the war. U.S. was a debtor before World War I and then was a creditor after World War I. We should have free trade to get paid off. Britain has U.S. competition, no gold standard. We sell on credit to Europe. 1919, 1920, the world is buying from us all on credit. That creates the boom, which creates the stock market crash and the Great Depression. We go on COD to the rest of the world. All trade stops. Farmers are stupid. They think boom will keep going. Manufacturing is smart. They hold reserves. This starts bust recession. 1920, Harding is the president. Return to normalcy. Harding programmed to solve the recession. President 1920. Oh, we're going to lower tax, cut government spending, deregulate the economy, hands off the economy, and he restores the gold standard. And here we go again. It's amazing how we get on the gold standard and good things happen, and we get off the gold standard and bad things happen. You couldn't have had World War I with the gold standard, so they get off of it, have the war, nobody wins, and now we're back to, hey, we need to get on the gold standard again. 1921 and 22, Fordney McCumber tariff raises tariffs, agriculture goes into a recession. As prices go up, you don't sell, you get a recession. You ask me, are we in a recession now? Yeah, absolutely. Prices are up, interest rates are up. Of course, we're in a recession. They might not say it, but of course, we're in one. Easy money starts the Great Depression in a sense. 1921, 1922. Easy money, low interest rates to farmers, banks lend out money to foreigners, credit, stabilization policy, falling prices, Fed prints money, never heard that one before, to stabilize prices to fend off competition. That sets up trade cycle to save England, started unions, never lowered tax rates, Fed lowered interest rates to save England after World War I, rigid economy. So you can't control the market. Only the market can control the market. And the market says, okay, Pedro, I'm taking this down. Okay, Pedro. Any more bullshit like that, and I will put you in a timeout. So we've got the depression starting because of the easy money. So they're printing money, giving it away, causing starts unions, never lowered tax rates. So the tax rates are high. They do lower the interest. So they make money very cheap, just like they're doing now. And when you do that, you get into these booms that aren't real, malinvestments. (1922, 24, 27), the Fed inflates the dollars into the economy to keep the boom going. Big mistake. So they're printing money, which is what? Inflation, which then what happens? You go into a depression. And what are we doing now? Oh, we're doing the same thing. We can't read what happened in 1922, 4, and 7. Germany has hyperinflation. 1924, the Dawes Plan by American bankers lend Germany gold to go on gold standard to collect on debt. They adopt free enterprise, sound currency. Germany borrows money back from the U.S., which they can't pay, and they keep printing. 1924, 1928, boom in Germany. Germany must have free trade. House of Cards built on free credit. 1924, new era, government ability to interfere in the economy. No more fear of recession or depression because of the Fed. The New Deal, 1924, government intervention, deliberate move for inflation by bank credit expansion, age of intervention. 1922, 1924, 1927, increase in the money supply to save Britain. 1927 to 29, boom in stock prices. So as they're fucking around with the money supply, printing it, devaluing it, we're not on, I don't think we're on the gold standard here. Maybe we are. I thought we were. The stocks start going up because the easy money people are spending, so the companies are making more money. 1929, 7/13/95, I think. Smoot-Hawley Tariff Act, 1929, handouts, trade implosion, cause of the Great Depression. So somebody asked me that before, and I don't even have to look at the notes to know it. 1929, stock market crash, November 29 to April 30th. The market regained 2/3 of its losses. So what is this big depression? The stock market was fine. By April, 2/3 of it was back. Then the Smoot-Hawley Tariff Act causes the depression. So that came in after the market had come back. Germany and Japan need world trade. Japan, zero economic resources, must import everything. Germany, some economic resources, must import food. Tariffs hurt them the most. Oh, geez, we went to war with Germany and Japan. Oh, I wonder why. Tariff hurts them the most. War party comes into power in Japan and Hitler in Germany. Yeah, I think Jim Harbaugh brings in a good defense. They've got all the pieces. They've got, Khalil Mack and Bosa, and they've got Herbert and Eckert, and then they've got Allen, and they've got Williams. So they got good receivers. I'm sure he'll draft some, get some guys from Michigan, add some defensive players. But it's his scheme comes in. I think it's a good move, and he's got Herbert. I mean, when he went to Frisco, he didn't have a quarterback. Now he's got Herbert, so I think it's a good move. I think he'll do very well there. I think they'll be right there with Kansas City and Denver. I would think we'll start doing better with Sean Payton. Oakland, no chance. So the Smoot Harley, it causes problems for Germany and Japan. Ataraxy, Hitler, Germany should stand alone. So Hitler is like a nut, and he thinks he's mad about World War One. And he says, Germany, we got screwed. It's like the Lion fan who gets screwed in the Dallas game, won't shut the fuck up. And here the Hitler, Germany should stand alone. Smoot Harley, number one of major reasons for World War II. So you're adding tariffs, you're fucking over countries that need it, because now you've made tariffs more expensive, and they can't afford it, especially with World War I, they're trying to pay back. So you've caused World War II with this stupid tariff. Hurt agriculture industry, they cannot export. Then a glut and prices drop in the U.S. 30% of banking disappears in 1929, 1930, agricultural banks. So you had banks that would loan money to farmers, and then you'd have banks that would loan money to, Wall Street and manufacturers. New era, more depressions or recessions, the Fed will print more money. So the Fed's causing inflation right from 1913. You can't just print money. It doesn't work. And so this is why we've had so many stock market crashes. Until 1944, we did go back on the gold standard. Commercial. Look what happens with the Fed. World War I. Now here comes Hitler in World War II with the Fed. The Fed goes away in 44, basically, to the gold standard. We don't have any wars. And then 1971 comes, and then all hell breaks loose. Now we got idiots wars going on now. Commercial banks, short-term notes, stay liquid, saved. Long-term banks failed. So you wanted to be in short-term banks. I'll do one more page. The Hoover Program, New Deal, 1929, 1930. He wanted to raise tariffs, government spending, reflate the economy, more inflation, raise taxes, keep wages up, which created unemployment. So this Hoover guy has his way up his ass. Bank of the U.S. crashes specialize in home equity loans. Jesus. I mean, it's just amazing. You've got the plan from Jefferson in 87 or 94. You've got it. Gold, low taxes, low government, free trade. Why do you keep moving from what you know is a good system to the crap, and you keep getting into trouble? I don't get what the fuck goes on. Why nobody can say, no, that's not in the Constitution. You can't do it. 1931, bottom out. Depression went worldwide. Austria, Germany, no credit, can't export, can't pay off their debt. 1933, Hitler comes to power. thanks to the Smoot-Hawley Tariff Act, this whole fucking thing. Kills millions of people because of these idiots. 1931, Britain goes off of gold. Gold exchange stands standard. Used gold and gold-backed currency. So Britain was using gold until 1931. Why they got off, I have no idea. France and the Netherlands gets hurt. I'm teaching. France and the Netherlands gets hurt, causes a depression as price of gold drops when Britain goes off of gold. 1932, U.S. goes off of gold, reflation, tried to inflate, didn't pass. Agreement in France to let Germany out of their war debts. Both parties got conservative Democrats and Republicans. The Democratic Party platform, free trade, gold standard, government, cut government spending. Why are we going back to it? Why did we get off of it? This is insane. They never implement their policies. So this is what their party platformed on, was Austrian economics, but they never did it. Then 1932, the biggest troublemaker, FDR, comes in. He was a terrible president. He was like Clinton. He was just horrible. March 4th, 1933, FDR takes office. Here comes the Great Depression. He takes us off the gold standard. He raises taxes. Geez, I wonder why we had a depression. Declares a bank holiday, open only solvent banks. FDR starts the New Deal, Chapter 41. The platform he ran on was free trade, gold standard, cut government spending, reduce taxes, and deregulation, which is what everybody wanted. The New Deal, no free trade, outlaws gold standard, raises government spending, raises taxes, and regulates. Just the opposite of his platform. So you wonder why you don't trust the government. You wonder why they're all pieces of shit. And they're all run by J.P. Morgan or Rockefeller. These are the people. So he would have been, J.P. Morgan would have been his boss. And really just, it's ridiculous. Let me finish this page. 1933, London Economic Conference. 1947 was GATT. 1945 was Bretton Woods, was his goal. GATT was to restore trade, and Bretton Woods was for sound money. U.S. won't do either one. Conference blows up, causes World War II. So this is in 1933. So they see the problem, so they're trying to do the restore trade, free trade and gold, and the U.S. won't do it, which causes World War II. But we won't get in World War II until Pearl Harbor, when we did the oil embargo on Japan, forced them into it. Could have avoided World War II if we just went back on free trade and the gold standard. FDR, great salesman, no substance. So he's a loser, basically. Why Germany and Japan went to war. Smoot-Hawley Tariff Act, London Economic Conference, failure of no gold standard, no free trade. Branch banking versus unit banking. This will be the last. Canada and England did branch banking. Banks can diversify their portfolio. Strong parts help their weak parts. Unit banking, the U.S., each bank stands on its own. If you're only in agriculture and agriculture goes south, bank goes south, this causes a lot of bank failure. Since we were a lot of farmers, that's what we did. Oh, and then I have to read this one. Keynes was brought in by FDR, 7/14/93. Depression caused by underconsumption. So FDR goes to Keynes, like putting what do you call it, onto the fire. Well, this is why it's a master's class, Greg and John. This is from 93. This is where am I? This is 7/13/93. I'm in my master's class. That's where I learned all this. But I want to go through all the notes so you can learn it and understand a lot more of what happened, to see is all happening again. And then you understand why I know all this is because that's what I did. And you understand it. because it keeps getting pounded in you. Go on the gold standard, have free trade, limited government, and do sound laws, and you can see it works. And when you get off of it and you print money and everything, you can see it doesn't work. And then where are we now? We're not on the gold standard. We got high inflation. We got corrupt government. We're no laws. We just do whatever, and whoever is behind. So if JP Morgan wants something done, the government does it, and they don't go to jail for committing terrible atrocities. And that's the problem. You get your BlackRocks and all these other idiots. So that's basically what the problem is. But it's as soon as you tell me we're not on gold standard and we don't have free trade, I tell you the system blows up, and here's 18 reasons why the system blows up. It's because of you don't have gold, you don't have the free trade. So World War II, we never had to go to World War II. Just free trade, gold standard, and you would not have had World War II. And you killed how many? 300 million men, 500 million. I think was it 100 or million? 5 million? No, I think it was like 100 million. Mostly all the men in Europe basically died needlessly. And we spent a lot of money, and then we ended up destroying Hitler. And then communism took over in Germany, and half of all of Eastern Europe was communist. Poland and Czechoslovakia and Romania. And that's why they're all fucked up, because they're still kind of communist, not really free trade, and that's why it hurts. But it's slowly getting better. I got my papers. These are my notes. These are my notes from my master's class. I told you, this is my master's class. I'm just going through my notebooks, and I'm teaching you my master's. So you can't get them anywhere. Just what I have is what I was in a class. That's what I tell Bobby. You're in a class, you take the notes, you write it down. But anyway, that's what's going on. But a warning, I don't want to hear anybody make predictions here but me, unless you can back it up. This is a class. This isn't some, let me hear your prediction. Let me hear this prediction. Let me hear that prediction. I don't want to hear anybody's predictions. That's not what we're looking for here. I'm looking to educate you on how I make my predictions. And if you want to have a prediction, you better explain why. And we had somebody say, I like Houston because they're hot. Well, as you can see, Houston got killed. That's not a good answer. See, and the problem is people are losing money betting on things they have no idea what they're doing. And that's what I'm trying to prevent. I'm trying to walk you through why you bet games and how you bet games. That's what I'm trying to do. Why do you bet KC? Because they're a dog with Mahomes. That's what I'm trying to tell you to do. Not just because they're hot, or I like their uniforms, or it's the same color as the logo, or I heard a hot tip on this. What the fuck is that? Based on what? Oh, Baltimore's gonna win big because of what? Did you call Santa Claus the Easter Bunny? I mean, come on. I don't want any of that shit on my channel. Just like I don't want a lot of Bitcoin, or I don't want any Keynesian on my channel. This is not the forum to talk Keynesian, to talk Bitcoin, to make up stories about, they're going to win big. Because people are coming in to get my pick, because people make a lot of money on my picks. I've gotten tips. I made 10 grand on your picks. They don't want to get influenced by other picks going, well, what does the professor want? They want my opinion. That's why you come here. I'm way up there in handicapping, right? Maybe 10 people can handicap like me. And Pedro, you ain't one of them. I guarantee it. So just be careful. But I don't want that shit. You get warned once. Second time you put another pick, and you end up where we won't see Pedro anymore. Now he can come in and listen. He just can't type. And I won't tolerate that. Again, this is my class, so I control the class. And I'm not doing this. This isn't a popularity contest. This is a class. You want to learn? You come in. I teach you. You'll be better for it. You'll buy gold. I'll save your ass. I'll save you all kinds of money that you're going to lose in your green money by buying gold, and you're going to make a fortune, or baseball cards, or whatever. Here, I'm teaching you about the gold standard. I mean, that's invaluable stuff. This is a class. Don't forget it. And if I pick Kansas City in the over in the Niner game, that's your bet. That's what you should be betting. And you shouldn't be betting Baltimore, and you shouldn't be saying I'm going to bet Baltimore. Now, you want to bet Baltimore? Bobby wants to bet Baltimore. You can go bet Baltimore. Just don't bring it in the class. So that's my point. So pretty much, what do we got? We got gold standard coming back. We all know that's good news. We got to get the free trade back and the low taxes. But you can see how people are in government. They all lie. I mean, it's the whole thing. The guy in 1930 lied. FDR lied. Gold standard. And then he takes the gold. What the fuck was that? I'm going to confiscate your gold. Then you get it, and now it's 100 years later, and everybody's worried. Oh, if I buy gold, they might take it. Well, ain't nobody going to know you have it. You don't advertise it. You put it in your safe and you hide it away somewhere, and you don't worry about it. Do you worry about them coming into your house and taking your cash? Probably not. And if you put it into money, if you put it into the bank so you don't worry that somebody walks into your house and steals it, the bank's going to steal it. So you're going to lose either way. But really, that's what you want to do. So there's this new Stoic one I want to watch. 7 ways to get ahead of 98% of the people. So it's a 20-minute one. I'll start watching this later. So anyway, that's what we know. We know that Brics is coming out with gold-backed currency. We know gold-backed currency works. We just cited 10 times when you were the leading power, you had gold and free trade, right? A limited government and low taxes. That's the game plan. And that's all Russia and China are trying to do. Russia's saying we're going to come out with gold-backed currency. They have low taxes. They'll lower their interest rate with the gold, and then the Brics is all going to go to a gold-backed Brics, basically gold standard. And we know that works. We've seen it work every time. We've never seen it not work. So it's very obvious what's going to happen. They're going on a gold-backed currency. Gold's got to go up. The currency's got to go up. And if you're not in it, you're going to go down. We've seen it. How many times did I just read it? From like 1870 to 1940. I'm in World War II. How many times did we? Oh, they went back to the gold standard. And everything was fine. So that's how I know when the Titanic hits the iceberg, it's going to sink because the water comes in the boat. And that's what I'm saying here. Oh, we're going back to the gold standard, but it's going to be profitable. Gold will go up. And I know people are like, TK, someone stole my baseball cards. That's a shame. Sorry, Craig. But that's where the thing is. So people are waiting. Oh yeah, I've heard this gold's going to go up, and well, it has. It's 2,000 an ounce now. It used to be 35 in 1971. But does it matter about money and gold? They're not really connected at all. Gold is an asset like a baseball card, like my Mahomes card. it is money, but so if you're trying to produce this, we don't want gold because people will want gold instead of this. So if we want this, we got to get rid of gold. That's the mentality of these idiots. But it's really not connected. This is a medium of exchange. So I can get money for work and take the money to buy groceries, go to a restaurant, pay my bills, whatever. That's really what it is, right? That's it. So I really don't get the other part of it. Gold's an asset. It is money also, but if every time you've went away from gold as the money and you've went to this, and the Civil War and the Revolutionary War, all the wars I pointed out, it's failed because you need money to go to war. And so the person going to war is probably the JP Morgans. He sells arms to both sides. He probably did it in World War One. He did it. I think he did. I'm sure he did it in World War Two. I'm sure he's doing it now with Russia and the Ukraine and with Israel. I think every war is from him selling the weapons to both sides. And I know Ford does that. He sold cars to the Nazis. I won't buy Ford at all. So that's what you get. You get a lot of that stuff. I got to get a water just a second. I got one of these fruit cups yesterday, and I'm trying to figure out how to open the fucking thing. Nope. They fooled me. It looks like that's where you open it. All right, 1 second. This is why I'm the professor. So since it's plastic, I take a knife to it and open it up. Not bad. You shouldn't have too much fruit. It's got sugar in it. So anyway, you can see the repeat of history. You get on the gold standard, everything goes well, free trade. You do a Smoot-Hawley Tariff Act, which raises the tariff on trade. You got the Great Depression. You got World War II. This conference all you had to do was it was going to lower tariffs and go back on the gold standard, and you wouldn't have had World War II. And these idiots do it and kill all these people. This is what I don't get about war. I mean, who developed that? Oh, well, I'll send men over with guns, and then you send men over, and we'll all shoot each other. What? Where did that come from? How about we play golf for the war? I'll play and you play, and if we win, I win. If you win, you win. That would be the ideal way, right? Then there'd be ringers. Okay, let's play a round of golf instead of a war. Then you'd bring your best golfer. Anyway, so that's like economics in action. What's happened? But it's always those are the key 5 or 6 things. Free trade, low taxes, gold standard, limited government. It's always the same 5 or 6 things that will give you success that they start doing and stop doing it. See, the only problem the founding fathers didn't put in is when the guy runs for president and he lies. FDR, well, you said there'd be gold standard and low taxes and low government and no inflation, and you came in and you did the opposite. We should be able to throw you out because we elected you based on that, but you didn't do that. So if you're not going to do what you said, then you should be kicked out. That's really the one issue that there is with government, that they're not doing that. So I can lie blue in the face to me. I can lie blue in the face. So that'd be like me saying, last week I took Houston. And then I say, no, I didn't. I really took Baltimore. All right, bet Houston. And Baltimore wins. And you said, wait a minute. You told me to bet Houston. I want my money back because you took Baltimore. And that's kind of what happened there. Well, wait, FDR, you said you're going to back on the gold standard, low free trade, low taxes, and you didn't do it. Yeah, but that's how you got elected. You shouldn't be able to keep your job if you lied about it. Let's say I get a job and I say I know Excel really well, which I do. When I get there, they have me do some simple Excel stuff and I can't do it. I'm going to get fired. Well, you said you knew Excel. That's why we hired you, and now you can't do it. We're going to fire you. And that's what should happen to these people in charge. You said we're going on the gold standard and you lied, you're gone. But who's going to do that? That's why you always need the checks and balances. But since all the government's run by the banks, it doesn't really fucking matter. But be careful when you're watching like this Whitney Webb girl, right? So you're watching her. Let me see.
If you have a 700 credit score, you could be making over $10,000 a month of passive income.
Rulers operated hundreds of years ago.
So if you're watching this person, this Whitney Webb, if you're watching this thing, she doesn't know what she's talking about. She keeps thinking, well, they're going to come out with CBDCs or Bitcoin. She doesn't understand economics. She doesn't understand the money that is used for Bitcoin is going to zero. There won't be. You can't control anybody with CBDCs, and you can't control anybody with Bitcoin because you won't have any money. So the control lever is gone, but she doesn't understand that. So in effect, she's lying to you, and she's trying to scare you. Or the government, the elitists want to control you. Well, good point, but it ain't going to happen. Bobby Bo. All right, Bobby Bo. Now I'm glad you're here. I waited for you, but I showed Alligator. No, I showed Mark McGuire earlier, and now I got to show it. I'm going to share that with you.
The fallout of a gold price revaluation will implode the synthetically priced silver market completely. The fallout of a gold price revaluation will implode the synthetically priced silver market completely.
So once Russia and China announce gold-backed currency, it implodes or blows up COMEX, and your silver is finally going to reach 1,000. So let's go to, let's see.
Bring attention to this de-dollarizing process. Now, our well-connected Chinese contacts aside, the average of multiple credible sources have estimated China's gold reserves really constitute something around 30,000 to 40,000 tons of gold, which, to stay on the radar for now, are salted amongst these state-held banks and could be surmised with a click of a mouse. Now, this conservatively suggests that the percentage of gold that backs the aggregate total of reported and this is Setster's reported 6 trillion assessment of China's FX reserves is plausibly closer to a staggering plus or minus 40%, alongside what could be estimated to constitute the highest global to GDP ratio of all central banks, multiples of the European gold to GDP average of around 4%. Now, if you recall, Shane, in our last episode, we looked at the ramp up and the potential scale of this de-dollarization process and why, Taiwan escalations aside, it doesn't suit China to shoot themselves in the foot by invoking the nuclear option of openly dumping treasuries. What is becoming clearer, though, is that China has, through their secretive shadow banking operations, been stealthily converting a large percentage of these hidden 3 trillion of largely dollar FX holdings into physical gold. And once this is ultimately revealed, the price of gold will far exceed Saxo Bank's $3,000 per ounce 2024 estimate, likely placing this as a floor to actually rally off, which is kind of what I was alluding to last episode.
So 3,000 is the floor. Will probably be more in our range, 10 to 20 grand. Once everything gets out in the open, this is what China's got, and Russia, by the way. So wanted you to get that. Now I'm gonna bring it a silver.
And for delivery, of course. Now, shorts would not find an easy exit, as each market halt would be followed by a bid-only follow-through into a bottleneck of shorts scrambling to mitigate losses. Many will be bankrupted.
Wow, Wow, that's amazing. And another reason why you can't get this information anywhere else except right here
We're
on
right
Live
here.
from the Vault. Now, Andrew, how would all of this impact silver?
Yeah, Shane, this is where it gets really funky. The fallout of a gold price revaluation will implode the synthetically priced silver market completely. Currently, in order to control one 5,000 ounce contract of silver, the CME requires a tiny $9,000 maintenance margin on deposit. And given the advantage of the House managed illegal position concentration, which Art Chilton talked about, it's been agreed multiple times that they have an excess position concentration, which is illegal technically. This enormous level of leverage is how the House market makers, the silver pit managers, have been able to control the massively paper-diluted silver market against this scattered group of speculative commodity trading advisors. First-tier liquidity providers are not stupid. Guess who's going to be on the wrong side of these bets? And currently, so a 5,000 ounces of silver is valued around $115,000, and to control it, the tiny $9,000 borrowed from the House to control each contract is historically around 8%. The implications for silver are enormous. As a result of the House running a massive leveraged, multifaceted, concentrated derivative book on these contracts, silver has become the most undervalued commodity on the planet Earth. Purely synthetic. A gold price revaluation would break the ratio trade these insiders rely on to contain these purely synthetic silver contracts, likely reverting the current ludicrous 90-to-1 ratio, 90 ounces of silver to buy 1 ounce of gold, closer to more like 15-to-1 or lower. Disbanding this ratio trade in itself would raise the price of each silver contract currently contained to the low 20s to about plus or minus $200 an ounce. This would likely force the 8% margin to increase to, at best estimate, 50% or to as high as 100%. Once again, longs would have an edge over the shorts here. So if we took 3,000 gold as the revaluation point, the completely synthetic derivative determined ratio trade would be blown out of the water. The short gold or silver ratio legs would be caught up in the underlying volatility, and both sides would scramble to square positions as the entire precious metal derivative complex collapsed into absolutely unfactored, unknown territory. One way or another, once silver rises above the technical and cartel defended fracture point of $35, derivative ranges would implode, triggering a bid-only short covering ramp well in excess of the 2011 $50 highs. So, who would be caught out into this revaluation? Every single CTA, commodity trading advisor, was naked short sold gold. Naked in so much as while their COMEX shorts are backed by dollar longs, these debt-laden fiat longs don't represent a deliverable NSFR compliant gold price when called upon for delivery. So in other words, when unleveraged gold bullion is demanded for delivery, it is going to take many more depreciating dollars to buy the same fully paid for COMEX ounces, kilos, tons on the other side of these paper bets. When delivery of these paper back shorts is then called in, this is when we will see the chaos unfold.
Wow, that's amazing. Now, Andrew, in the last couple of weeks...
So there you have it, Bobby. Gold price goes to 3,000. It blows up COMEX. COMEX now goes to physical. That's another point on here. I think it's the 25-minute mark, where basically...
Take it from me, Danica Patrick. No one beats champion checkered flag pre-owned. Hello and welcome.
The fallout of a gold price revaluation.
So basically that's going to blow up COMEX, which I know is on you and Luke's mind. He's saying that silver would do a 15 times compared to gold. Yeah, well, normally that's that pulling it out of the ground's roughly about 10 to 1. So for every 10 ounces of silver, you get 1 ounce of gold out of the ground because there's more silver than gold. So silver, gold at 3,000 puts silver at 300. 50,000, it goes to 5,000. So it should be about 1/10. So in other words, you should be able to go to the coin store, take 10 ounces of silver, let's say 15, and say, I like an ounce of gold. And you should be able to get it with no problem because it should be 1/15. So what he's saying is it once it breaks, it's all bullshit, right? It's all the paper derivatives. And he said you can control like 150,000 ounces of silver with $9,000 or something like that. Some bullshit number. But as gold hits 3,000, so the COMEX blows up because it's not made for that. So but we know it'll be higher. That's if gold stops at 3, which we know it won't. That's the bottom. So gold goes to 5, silver goes to 500. And I'm saying, well, when it hits 20,000, silver's going to hit 2,000. And then when COMEX breaks up because of Brics, then we've got a physical market, which is what we want. And so my point is with the physical market is that you better have your gold now. So the analogy I use is we're on the Titanic, me and you, and we see it hit the iceberg, and we calmly, it hit the iceberg means the water's coming in the boat, means the boat's going to sink in a few hours. Luke's asking us every 5 minutes, when's the boat going to sink? And we walk over to the lifeboat, and we get in the lifeboat, and we're fine. And my point is, you want to get in the lifeboat before the boat sinks, not after. So that's why I'm saying you want to buy your gold and silver now, because when the boat sinks, you're not going to be able, there might not be lifeboats. So that's really the key to it, is you want to buy your gold and silver as soon as possible because it's sinking, as we can see. And it's because of Brics, right? See, everybody goes, well, you've been saying the same thing for 5 years, and gold's supposed to go up and silver. Yeah, but now we have Brics, and Brics is the reason. That's the new kid in the block. All right, let's see if we can get to that other point.
Massively inflationary effects, oil and energy and grain priced in revalued gold grams will impose on central banks who have insufficient gold to act as a counterparty. So this is a huge story. So to answer your question, Shane, let's look at the impact of the gold price revaluation on the global exchanges. Now, due to its leverage structure, the CME's COMEX future exchange will be exposed as the only remaining non-NSFR compliant gold exchange. In order to survive, paper gold positions would have to become deliverable and able to be delivered at a net stable funding ratio compliant global price. Global price, of course it would. This would force margined, that is fractionally backed gold loans issued by the casino to clients to be called in. Far more impacting the shorts, who would be forced to cash settle highly leveraged undeliverable positions being called in by the House, who will themselves be exposed to matching globally settled revaluation prices. Or they would be drained of every last ounce, kilo, or ton by way of a massive exchange for physical withdrawal. And we've previously assessed this EFP backdoor is the paper market's Achilles heel. And if it was frozen, it would effectively, under the COMEX casino, what it would do was render them dead in the water. The CME cannot allow this to happen. But in order to survive as an institutional futures exchange, they will throw the poorly structured speculators under the bus. So really, to kind of sum it up, into a gold price revaluation event, the COMEX would go bid only until a real tradable, globally accepted physical price would emerge. And if the CME chose to call a force majeure by cash settling longs and shorts before allowing them to make good on their bets, it would collapse good faith in the entire suite of CME's related products. That ain't going to happen. Although, really, on the right side of the revaluation event, margined longs, i.e., those that had bet for a higher gold price, they have to get prepared to fully fund current margined positions. So unlike shorts, who will be called on to stump up physical delivery of previously borrowed and short sold warrants at pre-revaluation prices into a bid-only market, forcing unlimited losses far beyond the bullion warrants that were borrowed from the house and then sold. However, the margin longs who didn't want or had insufficient funds to meet a forced one-to-one margin requirement or have the funds to take delivery would be cashed out at, this is important, the higher globally driven spot-driven price. Or they could use price gains to cut their long exposure so as to stay in the game into a bid-only scenario. That would be at the expense of the shorts. Now, the COMEX circuit breaker halts would provide stage exit points, but as we previously warned, some brokers could fail. So please check with your broker. I've said it multiple times. Check with.
So, as he said earlier in the triad, there is that once gold gets revalued, COMEX is gone, and then we get a physical price, and that's what we're waiting for. And it looks like it's going to be very soon. And you better get off the boat before the boat sinks, right? That's my Titanic for you. It hits the iceberg, it's sinking. Do you want to get off the boat now, or do you want to wait till it starts sinking when the frenzy of everybody trying to get to a boat happens? So we want to avoid the frenzy. We want to be in it before the frenzy. Then let the frenzy drive the price of gold and silver up. So that's what we're doing. So we bought all our gold and silver, or a lot of it. Luke's okay. You're okay. I'm okay. And that's what we want to do. So you buy a little bit. I'll go buy another 10 ounces of silver, whatever. But basically, they're holding the price down so you can, aren't they nice? They're holding the price down so you can get out of the inflated piece of junk US dollar. So if you still have a lot of this, get the fuck out of it, because once the boat sinks, once COMEX explodes, you're going to have a real physical price. And when you have a real physical price, you're not going to be able to afford it. It ain't going to be $3,000. It ain't going to be $2,025 for silver. That's the paper price. When we get a real physical price, silver's got to be at least 500, and gold goes 3,000 to 5,000 on its way up the elevator. When the frenzy hits, people won't afford gold, they'll buy silver. And that's because those are the only two things you can get into. Somebody asked me about platinum, and I said, well, it's not a precious metal. It's not money. And as everything goes broke, nobody's going to want platinum because they won't use it, right? So it's not, gold and silver aren't because they use silver. You don't want to buy silver because they use it. You're buying it because it's money. It's real money. It says $1 on it. It says, 1 ounce of gold or silver. It says 999. I mean, that's why you're buying it. You're buying it as money. You don't care that silver builds batteries or builds this or builds that. You don't care. That's not why you're buying it. That's not why you're buying gold. You're not buying gold because of that. You're buying it because it's real money. This is where Warren Buffett and Gates don't understand that they Buffett buys silver because they use it in the batteries, but he won't buy gold because he doesn't get it. You think, well, what do they use gold for? They don't use it. It won't have a need. What an idiot. He's not getting that it's real money. And that's the point of it. It's real money. And that's why we're buying it. So when the fake money goes out, when this goes out all over the world, they're going to be looking for money. And everybody knows gold and silver is the money, but they don't believe in it yet because they have their euro or their pound or their Swiss franc. So they think they're safe. They don't know they're run by idiots like George Soros, who's printing the money to zero, leaving the gold and silver, which will go up dramatically. That's the bottom line. So that's what we know. And here's Mark McGuire saying that as soon as gold gets revalued, which it will because of Brics wanting to value it in oil and resources and things like that, and that'll make it. Then the Saudis and the Russians want oil. You want oil, you pay in gold. That's what they want. And so it's going to drive the price of gold up, and that'll drive the price of silver up, and that'll blow up COMEX, and we can get a real physical market price, which hopefully is free, a free market price, and then we'll be fine. And we'll be dancing in the streets, and everybody else will be like, "Oh shit! I wish I would have known about it." And that's why you have me. So that's that's Mark McGuire is basically de-dollarization, repricing it, and then this silver confab that it'll get the COMEX silver will get blown up when the gold revalues. They won't be able to keep it at 25, and then he's guessing 200, but he's also saying 15 times of silver to get to gold. So if gold's 3,000, it'd be like 400. No, it'd be like $450 an ounce because 10% would be 300, and then the other 15%, the other 5% will be 150. You take half of that, so that's $450 an ounce silver, and you can buy it for 25. That's where the no-brainer comes in. Is just go buy it. I mean, you can't. First of all, it's the only thing you can do that you have no risk in. The risk is keeping this. So if you're afraid of that, what did your girl say, Bobby Bo, when you told her holding on to the dollar is you're going to get killed? That's your risk, not buying the gold and getting robbed. Who the hell knows you got the gold? Go to the gold store, put it in your purse, put it in your pocket, walk out, put it in your safe at home. Nobody knows you got it. I don't drive home with holding the gold out. I'm like, look, I got gold. I might feel like doing that, but I don't. I think I'll go to the silver guy the next few days. It's like 25. It's 22 something an ounce. It's so low, and they keep playing the games with COMEX. So I don't even really pay attention to COMEX. I look just to laugh at what the price is, but I know it's so much. It's all bullshit paper. It's not real physical. So anyway, so Bobby Bo, I gave same. I mean, once there's two games, I gave KC and I gave the over in the Lion game. We're just waiting on Pacheco he's questionable, and then waiting on Debo Samuel. Hopefully he's okay. But anyway, here's a good story one for you, Bobby Bo. 7 ways to get ahead of 98% of the people. I just started watching that one, but I figured I'd watch it later. Tesla got their ass kicked, lost another $200 billion, plunged 12%, $200 billion in losses again. I don't know how that stock's over 20. I mean, they're selling electric cars that nobody wants. They're all dumping them. There's fires all over the place. People can't charge in the cold weather, and then the battery doesn't hold the charge in the cold weather. So explain to me why I would want an electric car. Not only are they're more expensive, but if the battery goes, it's the whole the batteries are $50,000 to replace. because it's so cumbersome. And then to get it probably got to take a month to order it and then install it. So, and they don't know what they're doing. So Tesla's going out too. They're going the way of the dodo, I heard in an Indiana Jones movie. So they're in big. There's no reason I would buy. You couldn't pay for me to get an electric vehicle because I don't want to be bothered by charging it in the cold weather every 5 minutes, or driving to Cincinnati and worried about I gotta go charge it. Who the fuck wants this? Is the stupidest product I've ever seen. Who wants an electric car to worry about charging it? When I don't have to, I can drive this gas powered car and drive it, and I fill it up, and I know I've got gas to go 400 miles. And if I've driven a 150, I'm fine. And the weather doesn't matter, the cold, the warmth doesn't matter. If it stalls on me, I can still get out of the car. I'm not going to be trapped in it because it's electric. It's a joke. It's a real, when you went from the horse and buggy, you got into a car. You didn't need the horse. You didn't need to feed the horse and clean the shit and all that. Here, it's a car. Fill it with gas and off you go. Now it got better and better. But the electric car, I don't see any value to the electric car over the gas car. I mean, maybe the environment, maybe, but I doubt it. And that's it. And then all the charging and all the other stuff makes it a headache. And it's a lot more expensive because per unit costs are much higher because they can't produce the 15 million gas-powered cars they produce. So I think that'll go away, just like the CBDCs and Bitcoin and all that. Bitcoin is not money. If you think it is, you're out of your minds. It's a penny stock, basically. That's what Bitcoin is. It's a penny stock. And I'm sure there's penny stocks that went from 70 cents to $10. Most of them go from 70 cents to zero. Every once in a while you get one and you brag about it, but you don't brag when on the other 20 you bought that went to zero, like one coin where they never even made it, or Ben Franklin, whatever his name is, who stole everybody's, or this crypto queen who stole 16 billion from the mafia. So not a real good thing. So that's what we got. So I went through the football, and then I read a lot of my master's class. Greg and John trying to figure out where I got notes from. I guess when I say master's class, he doesn't put two and two together to realize that I have a master's in this. These are my notes from my master's class, making this a master's class. I don't know, Bobby. I don't know. What are we going to do with the guy? So, yes, these are my notes from my master's in the 90s. And you're privy to them. You are getting a master's class for nothing. I'm nice enough to do that. Anyway. So we will see medals go. We got no football tomorrow. It'll be a sad day. We do have football on Sunday. So the KC game's on at 3, and then the Lions Frisco is 6:30. I always hate that. Why do we need this late game on Sunday? Why not 1 to 4, 4 to 7 like we're used to? I don't even know what. So we don't go to dinner. We got to order pizza in. I mean, if they're talking control, this is the way they can control us. This is how they control us, right? Everybody with the control. This is how they control. They have the games on Sunday, so we're going to run out on Saturday because there's no games, and we're going to be home for the games. And so at 3 o'clock, everybody will be home, and then you might run to dinner at 5:30 or carry out a pizza or something to get back for the 6:30 game time. So you'll run out to dinner to carry out to come back for 6:30. I mean, that's basically what they're having us do. So I'll talk about control. They're doing that. As far as them seeing what we do on the internet, they see what we do on the internet anyway. What's the big deal? If you're not breaking the law, why is everybody so worried about the control issue? I mean, I talked to Daria. What are you gonna do? arrest me for talking to my Russian girlfriend? I mean, the whole thing just seems so stupid. But it's all like people saying it and everybody getting, oh, they're going to do CBDCs. No, they're not. They're nowhere near it. Plus, they can't do it. The dollar's collapsing. What are they going to do? CBDC. And if it ain't backed by gold, it ain't going to work anyway. They'll collect all the information. There won't be money, you fucking idiots. The money is going to zero. Well, they want to know what everybody's doing. Well, in that case, they're not gonna know what I'm doing with my gold. So that's your out if you're worried about being tracked by the CBDCs or the internet or whatever. You have gold, you're not tracked. Nobody knows you got gold, what you're doing. And when you cash in your gold, you got the money and then whatever. But you're not going to get CBDCs. You'll get paper. Anyway, so that's what's going on. So I hope you had a good day. It's warm here. It's in the 40s. There's a good chance of rain. The weather and the games, let's go through that real quick. Gold's at 2018, silver 2280. Amazing. So the weather at the games. All right, we've got KC, Baltimore, Pacheco still questionable, 63% chance of rain. So that's going down. 45 degrees, 11 mile an hour wind. Baltimore 4 and 44.5. So we might get rain, but I don't know that bothers Mahomes. Probably bother Lamar more because he wants to run and it's going to be slippery. And then Detroit, Frisco, it's just Debo Samuel is questionable. No chance of rain. It's 0, 73 degrees and 3 mile an hour winds. So weather won't be. We're just waiting on Debo. I don't know what the shoulder is. They won without him last week, so I'm not really concerned. And they've practiced without him this week. So he got hurt in the first series, so they're trying to get used to it. Now, so they played the whole game without him, and now they're practiced the whole week without him. And so now they're much better prepared to design other receivers or tight ends or running backs to take his place. So that always helps. So really, Casey, as long as Mahomes is healthy, that's all I care about. Him and Kelsey are fine. This Pacheco I would like because I like the mix with the pass and run. Anyway, so that's a 3:00 Sunday game in Baltimore with a 60% chance of rain today. Now we'll see what happened. It's been kind of raining here, but not terrible. Mostly it's melting all the snow around, which makes it tough. Yesterday it was still icy. Today it's not. It's very the driving's fine. Just going around in the complex is a little hard. But really, if we get Pacheco, I'm not worried about KC. That's about it. Bobby, anything? You're quiet. Gregor John showed his muscle. All right. Well, there you go. I think it's time for dinner. It's 5:30. Have a wonderful day, wonderful night, and I will talk to you tomorrow. Probably in the morning, I think 11:30, 12 o'clock, and then go to the pool. I think I'll get Chinese tomorrow. And then Sunday, I don't know what I'm going to do. Well, Sunday I'll come on at probably 11, but it'll just be a quick football show to see who's playing and if the weather changed and to talk about that. But I won't do economics Sunday, maybe tomorrow because it's Saturday. There's not much else, but we'll see. All right, everybody. Have a good day. www.teaserking.com. They're revaluating gold because of Brics, and gold and silver is going to go through the roof. Don't get stuck on the boat as it sinks. Get the hell off the boat onto the gold boat. All right, everybody. Have a good day.